Ever wondered how Robinhood managed to climb after reporting record earnings for the first quarter? Well, let's dive into the numbers that tell the tale. Robinhood, the retail brokerage that's been making headlines, reported a net income of a whopping $157 million in the first quarter. Talk about a turnaround from the previous year's loss. This impressive figure, along with record-breaking earnings per share and revenue numbers, had the company's stock price soaring over 5% in after-hours trading. Now let's talk about cryptocurrency. Cryptocurrency transactions played a significant role in Robinhood's revenue generation, contributing a cool $126 million. But as with all superhero stories, there's a looming villain: regulatory uncertainty over its cryptocurrency operations. Despite this, Robinhood's funded customers increased by an astonishing 810,000 year-over-year, reaching 23.9 million. Additionally, assets under custody rose by 65% to a staggering $129.6 billion. So Robinhood has been on a financial rollercoaster ride, with its stock taking a joyride upwards. But wait, there's more to this story. Just when Robinhood thought it was time to celebrate, the SEC decided to crash the party. A Wells notice, ladies and gentlemen, is not an invitation to a friendly afternoon tea, but a heads-up of potential legal action. In this case, it was issued to Robinhood by the SEC, the Securities and Exchange Commission, concerning the brokerage's cryptocurrency operations. Now let's not mince words. Robinhood had a fantastic first quarter, with net income soaring to $157 million, a record high that had them dancing on the tables. But this Wells notice? It's a bit like having a huge, looming rain cloud over your sunny picnic. But what does this mean for Robinhood's future? Well, uncertainty is the name of the game here. The SEC's potential legal action could throw a wrench in Robinhood's cryptocurrency operations, which, by the way, contributed a whopping $126 million in revenue. So while Robinhood was popping the champagne, the SEC was sharpening its pencils. But hold on to your hats, folks, because this roller coaster isn't over yet. So, what happens now that Robinhood has had its moment in the sun, and the SEC has rained on its parade? Well, let's start by acknowledging that the SEC's notice is a significant cloud on Robinhood's horizon. It's like a black cat crossing your path if you're superstitious. But if there's one thing we've learned about Robinhood, it's that this company is resilient. It's like a rubber band. You can stretch it, twist it, even tie it in knots, but it always springs back. Remember the meme stock madness, or when the crypto craze was at its peak? Robinhood was there, weathering the storm and coming out stronger. This time too, despite the looming SEC scrutiny, the company has reported record earnings and a surge in its stock price. It's like a phoenix rising from the ashes, or in this case, the trading floor. Much of Robinhood's resilience can be credited to its innovative approach. It's like the Elon Musk of brokerage firms, constantly pushing boundaries and challenging the status quo. And let's not forget its massive customer base. With nearly 24 million funded customers, Robinhood is not just a company, it's a community. It's like a small country where everyone speaks the language of stocks and cryptocurrencies. So while the future may seem uncertain and the SEC's notice may cast a long shadow, Robinhood has shown time and again that it can navigate through the storm. It's not just about surviving, it's about thriving in adversity. It's like sailing through a tempest and coming out with a tan. So, while Robinhood might be playing a dangerous game of cat and mouse with the SEC, it's got a few tricks up its sleeve. After all, every good story needs a cliffhanger.